President Trump's decision to temporarily ease tariffs on Chinese electronics injected a much-needed dose of optimism into the global stock market. Investors, hungry for good news amidst trade war anxieties, responded with enthusiasm, sending stock indexes soaring across the board. This move offered a welcome respite from weeks of escalating tensions and fears of a full-blown trade war between the world's two largest economies. The benchmark S&P 500 index saw a significant jump, surging by 1.1% in afternoon trading, following an even more impressive initial gain of 1.8%. The Dow Jones Industrial Average, a bellwether for American industry, wasn't far behind, climbing a solid 1%. Meanwhile, the tech-heavy Nasdaq Composite Index, home to many companies directly affected by the trade dispute, experienced a robust 0.9% increase. This positive momentum wasn't confined to U.S. borders. Across the Atlantic, European markets mirrored the bullish sentiment. France's CAC 40 index surged by an impressive 2.4%. Germany's DAX index followed suit with a 2.9% leap, and other major European markets registered similar gains. The temporary reprieve on tariffs proved particularly beneficial for the technology sector, which had been bearing the brunt of the trade war anxieties. Shares of industry giants like Apple and Dell Technologies skyrocketed, reflecting renewed investor confidence. Apple, a frequent target of trade war rhetoric, saw its stock price surge by a remarkable 3.7%, while Dell Technologies enjoyed an even more impressive rally, with its shares soaring by 4.6%. The automotive industry, another sector significantly impacted by the trade tensions, also received a boost from President Trump's announcement. The president hinted at the possibility of extending the tariff relief to the auto sector, sparking optimism among investors. General Motors witnessed a 3.6% upswing in its stock price. Ford saw a healthy 4.1% gain, and Stellantis, the parent company of brands like Chrysler and Peugeot, enjoyed the most substantial surge at 5.1%. This positive response from two major industries highlights the tangible impact of easing trade tensions. The tariff pause, even if temporary, provided a much-needed breather for businesses and investors alike, allowing them to reassess their strategies and outlook. The wave of optimism generated by President Trump's tariff pause extended far beyond Wall Street, resonating strongly across Asian markets as well. Japan's Nikkei 225 index, a key barometer of the Asian economy, closed 1.2% higher, while South Korea's KOSPI index, reflecting the sentiment in another major Asian economy, edged up by 1%. This synchronized global rally underscores the interconnected nature of the global economy. The trade war between the US and China, two economic powerhouses, had cast a long shadow over international markets, creating uncertainty and volatility. The tariff pause, even if temporary, served as a powerful reminder of the positive impact that easing trade tensions can have on global economic sentiment. It offered a glimmer of hope that a full-blown trade war, with its potentially devastating consequences, could be averted. Despite the positive market reaction, it's crucial to acknowledge the temporary nature of the tariff relief. The uncertainty surrounding the duration of this pause, and the lack of concrete details regarding future negotiations, continue to fuel market volatility. Investors remain cautious, aware that the trade war is far from over, and that the situation could easily revert if talks falter. Adding to the complexity is China's response to the tariff pause. While welcoming the move as a step in the right direction, China's Commerce Ministry emphasized the need for a complete rollback of all tariffs. President Xi Jinping, during his Southeast Asia tour, reiterated China's stance, stating that no one emerges victorious from a trade war. The bond market, often viewed as a gauge of investor sentiment towards risk and future economic prospects, reacted to the tariff pause with a sigh of relief. Treasury yields, which had spiked amidst the escalating trade tensions, retreated from their recent highs. While the temporary tariff pause provided a much-needed boost to global markets, the underlying trade war anxieties persist. The coming weeks and months will be crucial in determining whether this pause translates into meaningful progress towards a comprehensive trade agreement, or merely serves as a temporary reprieve in an ongoing economic standoff.